While everyone's been talking about gold hitting record highs, something extraordinary has been happening with silver that almost nobody saw coming. As of December 14th, 2025, silver is trading at an eye-watering $62 per ounce. To put that in perspective, silver has more than doubled in value this year alone. A staggering 110% gain that's left gold, stocks, and even Bitcoin in the dust. But here's what's truly fascinating. This isn't just another speculative bubble. What we're witnessing is a fundamental shift in how the global financial system views silver. The white metal is quietly emerging from gold's shadow and establishing itself as a formidable safe haven asset in its own right. Today, we're diving deep into why silver has become the surprise winner of 2025, why experts believe it's still undervalued despite its meteoric rise, and what this means for your portfolio. Stay with me, because by the end of this video, you will understand why some analysts are predicting silver could reach $100 per ounce or even higher. But first, I'm not a financial advisor, and nothing in this video should be considered financial advice. Always do your own research and consult with a qualified financial professional before making any investment decisions. Now, if you're enjoying this content, smash that like button and subscribe to the channel so you don't miss our upcoming analysis on precious metals and global markets. All right, let's get into it. The safe haven evolution. So what exactly is a safe haven asset, and why is silver suddenly earning this title? Traditionally, when markets panic, when inflation spikes, or when geopolitical tensions explode, investors flee to safety. For centuries, that meant gold. Gold was the undisputed king of safe havens, the ultimate store of value when everything else seemed uncertain. But 2025 has proven that silver deserves a seat at that table, and the numbers back this up spectacularly. Silver's dramatic outperformance in 2025 has seen the white metal deliver returns that have more than doubled investors' capital, with gains significantly outpacing gold's strong yet more measured performance. While gold has posted impressive gains of around 60%, silver has surged over 100%, nearly double gold's performance. What's driving this transformation? Three major factors. First, the perfect storm of economic uncertainty. We're living through a period of persistent inflation, aggressive trade policies, including widespread tariffs, and geopolitical tensions from Ukraine to the Middle East. When the world feels unstable, precious metals shine. But unlike previous crises, investors aren't just buying gold anymore, they're also buying silver in record amounts. Second, silver's unique dual nature. This is crucial to understand. Gold is primarily a monetary asset. It sits in vaults, it backs currencies, it's insurance against chaos. But silver is different. Silver is regaining prominence as a trusted safe haven asset while also being crucial to the technology needed to meet rising global electricity demand, including solar power, EVs, and electronics. This dual role means silver catches a tailwind from both sides. When investors panic, they buy silver for safety. When the economy booms, they need silver for technology. It's like having two engines instead of one. Third, institutional recognition. Here's something that flew under the radar. One country plans to acquire $535 million worth of silver over the next 3 years, marking the first time any central bank has explicitly included silver in its purchasing plans during the current bull market for precious metals. Think about that for a moment. Central banks, the most conservative financial institutions on the planet, are now buying silver as a reserve asset. When central bankers start diversifying into silver, you know something fundamental has changed. The supply-deficit crisis. But here's where the story gets really interesting, and frankly, a bit alarming if you're an industrial buyer. Silver is facing what experts call a structural supply deficit. And this is not just for 1 year. Silver has been in a structural deficit since 2021, with the cumulative shortfall for 2021-2025 totaling almost 800 million ounces. Let me break down what that means in plain English. The world is consuming more silver than it's producing every single year, and it's getting worse, not better. For 2025, estimates suggest a deficit ranging from 149 million to 240 million ounces. That cumulative 800 million ounce shortage, that's equivalent to an entire year's worth of global mine production, just gone. Vanished into the industrial machine and jewelry markets. Why can't miners just produce more? Here's the problem. Roughly 70-80% of global silver output is a byproduct of mining other metals like copper, lead, and zinc. You can't just open a silver mine overnight. Most silver comes out of the ground as a secondary product when companies are actually mining for copper or zinc. This creates what economists call inelastic supply. Even when silver prices double, miners can't just flip a switch and produce more. They're constrained by the economics of the primary metals they're actually targeting. Global silver mines are projected to yield 835 million ounces in 2025, representing a 7.23% decrease compared to 2016 levels. Think about that. Silver demand has been exploding, but production has actually fallen over the past decade. The mines are facing serious challenges. Ore grades are declining, meaning there's less silver in the rock they're pulling out. Major deposits are aging and depleting. The permitting process for new mines can take 10 to 15 years, and there's been chronic underinvestment in silver exploration for decades because prices were too low to justify it. Meanwhile, recycling can't close the gap. Recycling is projected to provide 195 million ounces in 2025, showing a 24% increase. That's helpful, but it's nowhere near enough to offset the deficit. What happens when you have persistent supply deficits? Basic economics. Prices go up. But there's more to it than that. London's vaults have been emptying rapidly, with holdings falling from 31,023 metric tons in June 2022 to 22,126 metric tons by March 2025, its lowest point in years. The physical metal is literally draining from the major trading hubs. This is crucial because the paper silver market, all those futures contracts and ETFs, ultimately needs to be backed by real metal. When the vault's empty, that's when things can get interesting. One analyst described it perfectly. We're heading toward a supply-demand brick wall. And when that wall is hit, prices could move violently in a very short period. The industrial demand explosion? Now, let's talk about the demand side, because this is where silver's story becomes truly unique among precious metals. Industrial fabrication is forecast to grow by 3% in 2025, with volumes on track to surpass 700 million ounces for the first time. Industrial demand now accounts for 50 to 65% of total silver consumption, meaning over half of all silver is being consumed by industry, not investors. The solar revolution. The biggest driver? Solar energy, and the numbers are absolutely staggering. In 2024, solar alone absorbed 232 million ounces, up from just 60 million ounces in 2015. That's almost a 400% increase in less than a decade. Why does solar need so much silver? Because silver is the most electrically conductive metal on Earth. Every solar panel requires silver paste for its conductive properties. As the world races to achieve net zero emissions and governments pour trillions into renewable energy, silver demand from this sector is only accelerating. By 2050, solar energy could account for approximately 85 to 98% of the current global silver reserves. Think about that projection for a moment. Within 25 years, solar panels alone could consume nearly all of our known silver reserves. That's not sustainable without dramatically higher prices or technological substitutes, and so far, no substitute comes close to silver's performance. Electric vehicles and electronics. In the automotive industry, greater vehicle sophistication, electrification of powertrains, and ongoing investment in expanding related infrastructure will boost silver demand. Electric vehicles use significantly more silver than traditional cars, up to 3 times as much in some estimates. Then there's the entire electronics sector. Your smartphone, computer, servers running AI models, 5G infrastructure, they all require silver. Demand is soaring in consumer electronics, automotive electronics, data centers, artificial intelligence systems, and 5G networks, reflecting a 53-fold increase in global IT power capacity from 2000 to 2025. The AI factor. Here's something most people miss. The artificial intelligence boom is a silver story. All those massive data centers powering ChatGPT, Claude, and other AI models, they're packed with silver-containing components. As AI computing power grows exponentially, so does the need for silver. Can industry cut back? You might be wondering, can't these industries just use less silver or find substitutes? The reality is, they're already trying. Notable advancements within the solar PV segment have led to a sharp reduction in silver loadings. Companies are working hard on thrifting, using less silver per unit. But here's the catch. Even with successful thrifting, total demand keeps rising because the number of solar panels, EVs, and electronic devices is exploding. Silver's unique properties, highest electrical conductivity, highest thermal conductivity, most reflective, make it nearly irreplaceable in many applications. Any substitute means worse performance, which, for industrial applications, can mean the difference between profit and loss. The bottom line on industrial demand. This isn't cyclical demand that goes away in recessions. This is structural demand driven by the global energy transition and digital transformation. Even if the economy slows, countries aren't abandoning their climate commitments. Tech companies aren't stopping AI development. The electrification of everything isn't reversing. This creates a floor under silver demand that didn't exist in previous decades. And that floor keeps rising. The valuation story. Despite silver's incredible 2025 rally, here's the kicker. Many analysts believe it's still undervalued. How is that possible? The answer lies in the gold to silver ratio, one of the oldest metrics in financial markets. The gold-silver ratio currently sits at roughly 80 to 83 ounces of silver per ounce of gold in November 2025, which is above the historical average. This means you need about 80 to 83 ounces of silver to equal the value of 1 ounce of gold. Why does this matter? Since 2000, the gold-silver ratio has averaged 69:1. The long-term historical average over 25 years is even lower, around 60 to 65. 1. Some periods have seen it as low as 50.1 or even 40. 1. Let's do the math. Gold is currently trading around $4,200, $4,300 per ounce. If the gold-silver ratio returned to its 25-year average of about 65.1, silver would need to trade at approximately 65, 66 per ounce. At 60.1, we're looking at $70 per ounce. At 50.1, over $85 per ounce. And remember, silver is currently at $62. So even after more than doubling this year, the ratio suggests there's still meaningful upside if historical norms reassert themselves. Why did the ratio get so high in the first place? During the COVID-19 pandemic, the ratio peaked at 123.3. In periods of extreme crisis, gold initially surges faster than silver because it's seen as the ultimate safe haven. Silver, with its industrial exposure, initially gets sold off. But here's the pattern. Following peaks in the gold-silver ratio, silver prices have historically significantly outperformed gold over the following 6 to 24 months. After the panic subsides, silver catches up and often overshoots. The mining production ratio. Here's another fascinating angle. The production ratio of gold to silver is approximately 1.7.5, while the price ratio is around 181, a huge disparity. Think about this. Silver comes out of the ground at about 7 to 8 times the volume of gold, but it trades at 80 times less value per ounce. That discrepancy suggests one of two things. Either silver is remarkably undervalued or gold is remarkably overvalued. Most analysts lean toward the former. Expert forecasts. The bullish case for silver has serious institutional backing. Bank of America analysts forecast a high of $65 per ounce and an average of $56.25 per ounce for 2026. But some go much further. And the most bullish? Some investors figure silver could reach $200 to $400 an ounce before the current cycle is complete. Are these predictions guaranteed? Of course not. But they're not coming from random people on the internet. They're coming from fund managers, mining executives, and analysts who've been studying precious metals for decades. Central banks and monetary policy. Now let's talk about the macro backdrop that's turbocharging silver's rise. Central bank policy and the broader monetary environment. The Federal Reserve has implemented 3 rate cuts in 2025, bringing the federal funds rate to 3.50, 3.75%, and has initiated reserve management purchases of approximately $40 billion in Treasury bills. Why does this matter for silver? When interest rates fall, the opportunity cost of holding non-yielding assets like silver decreases. If you can only get 3.5% in a savings account instead of 5%, suddenly holding silver, which pays no interest but might appreciate 50%, looks pretty attractive. But there's more to it. These reserve management purchases, while characterized as a technical liquidity tool, are widely interpreted by market analysts as a precursor to balance sheet expansion. In other words, the printing press is warming up again. When central banks expand money supply, it debases currency, and when currency loses purchasing power, hard assets like silver preserve wealth. It's happened countless times throughout history. The currency debasement trade, the US dollar, has weakened substantially in 2025. A weakening US dollar, which has dropped by 8.5% in 2025, further enhances silver's attractiveness to international buyers. This creates a powerful feedback loop. Weak dollar, higher precious metals prices, more investors seeking hard assets, even higher precious metals prices. Central bank, gold buying. While central banks aren't buying silver in huge quantities yet, their record gold purchases tell us something important about the mindset at the highest levels of global finance. Central bank gold purchases since 2022 have been more than twice their 2015-19 average, with their share of total demand rising to nearly 25% in 2024 compared to 12% in 2015-19. Central banks are the ultimate long-term conservative investors. They don't follow fads. They don't speculate. When they massively increase precious metals buying, they're telling you they're worried about the stability of the fiat currency system. And what benefits gold in this environment? Silver benefits even more because it's starting from a much lower valuation base. The geopolitical factor, geopolitical tensions, and broader economic concerns have fueled strong safe haven demand, with gold and silver rallying amid heightened uncertainty. Trade wars, military conflicts, debt concerns, political instability, all of these factors push investors toward tangible assets. In 2025, we've seen escalating trade tensions, reciprocal tariffs, ongoing conflicts, and mounting concerns about unsustainable government debt levels. Each of these creates another reason for investors to diversify into precious metals. The inflation hedge. Real inflation, not what the government reports, but what you feel at the grocery store and gas pump, remains elevated. Silver has historically served as an inflation hedge, and with central banks clearly prioritizing economic growth over price stability, that role becomes more important. So let's bring this all together. Silver has emerged as a formidable safe haven asset in 2025 for reasons that go far beyond speculation. We're seeing a structural supply deficit entering its fifth consecutive year with 800 million ounces of cumulative shortfall explosive industrial demand driven by the unstoppable trends of solar energy, electric vehicles, and digitalization. A gold to silver ratio that still suggests undervaluation despite the massive 2025 rally. Accommodative central bank policies, creating ideal conditions for non-yielding hard assets, geopolitical and economic uncertainty driving safe haven demand, physical market tightness with vaults draining and deliverable supplies shrinking. This confluence of diminishing supply, relentless demand from green technologies, and supportive monetary policies has propelled silver to unprecedented heights. But here's what's crucial to understand. This is not the 1980 Hunt Brothers manipulation or the 2011 speculative frenzy. The 2025 rally is fundamentally underpinned by a structural imbalance where accelerating, price-inelastic industrial demand is colliding with constrained supply. What could derail this? Be aware of the risks. A sudden economic collapse that crushes industrial demand, technological breakthroughs that dramatically reduce silver use, a massive new mine discovery, or aggressive interest rate hikes could all pressure prices. Markets are volatile, and silver is particularly so. The takeaway: whether silver reaches $100, $200, or retraces to $40, what's clear is that the fundamentals have shifted dramatically. Silver is no longer just poor man's gold or an industrial byproduct. It's becoming a critical strategic resource that sits at the intersection of the safe haven trade and the green energy revolution. For the first time in decades, silver is stepping out of gold's shadow and claiming its own place as a safe haven asset. And that transformation might just be getting started. Remember, always do your own research, understand your risk tolerance, and never invest more than you can afford to lose. The views expressed here are for educational purposes only and should not be considered financial advice. If you found this analysis valuable, please hit that like button and subscribe to stay updated on precious metals markets and global economic trends. Drop a comment below. Are you bullish or bearish on silver? What price do you think we'll see by the end of 2026? Thanks for watching, and I'll see you in the next video.